Hello everyone, and welcome back to Explain the Charts. Today, September 16th, 2025, we're putting the spotlight on the USDCAD currency pair for an in-depth analysis, blending both current news and recent chart data. The Forex market is on edge with an action-packed week ahead, heavily influenced by upcoming interest rate decisions from both the Federal Reserve and the Bank of Canada. Let's start by looking at the daily chart of USDCAD to get a broad overview of its price action over the past year. As you can see, the daily chart reveals significant volatility, including some extreme, single-day percentage drops in late 2024, which are likely data anomalies. We'll focus our analysis on the more consistent and recent price action from 2025, particularly from July onwards, which better reflects current market dynamics. Recent news indicates that economists widely anticipate the Federal Reserve will initiate a 0.25% interest rate cut in its upcoming meeting, likely on September 18th. This expectation stems from a softening U.S. labor market, despite headline inflation ticking slightly higher. Similarly, the Bank of Canada is expected to announce a 0.25% rate cut tomorrow, September 17th, driven by a contracting Canadian economy and inflation falling below its 2% target. The market is heavily positioning for these decisions, which directly impacts the US dollar to Canadian dollar pair. Now, focusing on the recent period from early September, we see the USDCAD hovering around the 1.38 to 1.385 level. However, leading into this week, news outlets reported USDCAD sliding, with the pair weakening below 1.3850. This bearish movement on September 15th, visible as a notable red candle, directly correlates with market positioning ahead of the BC rate cut bets. The current daily close at approximately 1.37745 further confirms this downward pressure. Let's zoom into the 1-hour chart to examine this recent slide in more detail and identify intraday movements. Looking at the 1-hour chart, specifically from September 11th, we observe a general downtrend. Price initially moved around the 1.383 to 1.386 range, but on September 15th, the selling pressure became much more evident. We saw a significant move lower, pushing the pair below previous intraday support levels. This consistent bearish hourly action underscores the market's reaction to the prevailing sentiment that both central banks are leaning towards easing monetary policy. The rate differential between the US and Canada, currently favoring the US dollar, theoretically suggests a stronger USD, but short-term economic data and rate cut expectations are clearly dominating. Switching to the 15-minute chart for an even closer look, we can pinpoint the precise moments of accelerated selling. Notice the series of red candles around September 15th, particularly from 14:35 Universal Time Coordinated to 15:20 Universal Time Coordinated. Here, the price dropped from 1.38216 to approximately 1.38027, then continued lower towards the current close. This highlights the immediate, granular market response as traders adjusted their positions in anticipation of the Bank of Canada's decision tomorrow. The intraday resistance around 1.384 to 1.385 and immediate support near 1.377 to 1.378 have been clearly tested and, in the case of support, broken. Now, let's consolidate our findings for short and long-term outlooks, returning to the daily chart. In the short term, USDCAD is currently bearish, with the critical psychological support level around 1.37 being the next key area to watch. If the Bank of Canada delivers an expected 25 basis point cut tomorrow and the market perceives the Fed's cuts as less aggressive, we could see further downward pressure, potentially retesting 1.37 or even the year-to-date low of 1.3537. A break below 1.37 would signal a continuation of this bearish momentum. Conversely, if Canadian CPI data, which is due tomorrow, surprises higher or the BC unexpectedly holds rates, we could see a quick reversal towards resistance levels around 1.385 and 1.39. For long-term traders, the prevailing 175 basis point interest rate differential, favoring the US dollar, still presents a fundamental argument for USD strength. If this differential is maintained or widens, the current selling pressure might indeed be temporary. However, trade policies, particularly President Trump's tariffs on Canadian goods, introduce another layer of uncertainty that could weigh on the Canadian economy and, consequently, the CAD. Therefore, any sustained break above 1.39 could signal a resumption of a longer-term bullish trend for USDCAD. Important price levels to monitor are the immediate support at 1.377, a stronger support at 1.37, and key resistance levels at 1.385 and 1.39. An unbiased prediction for the very short term is a 70% likelihood of continued bearish pressure towards the 1.37 level, especially if the BC cuts rates as expected and no major surprises emerge from the Canadian CPI. A break of 1.37 could open the door to 1.365 or even lower. However, a rally back to 1.385 or 1.39 has a 30% likelihood, particularly if the BC signals a pause in future cuts or if U.S. economic data unexpectedly weakens the case for significant Fed easing. Traders should keep a very close eye on the Bank of Canada's rate announcement tomorrow and the Federal Reserve's decision the day after. These events will be the primary catalysts dictating USDCAD's direction for the remainder of the week and potentially into the medium term. Always remember to manage your risk carefully. Thanks for joining us on Explain the Charts.